Welcome to In the Hot Seat. If you're a repeat viewer, thank you very much for joining us again. And if you're new to the show, every 2 weeks we put industry experts and our customers in the hot seat for a lively discussion, debate, and some discourse as we humanize the digital experience. All aspects of the customer lifecycle are up for discussion, as well as the technologies used throughout each phase of the journey. This episode, we're going to focus on actually a different area than we have in any of the episodes before. So I'm excited about this. We're going to focus around shareholders, particularly around retail investors and how you can build a better experience for them. And Pete, I was thinking about this as we were getting ready for the episode, and the dynamics of the stock market in the last 25 years have changed dramatically. With things like Reddit and all the other social channels, and the fact that, you have, free basically trading, and all the kind of growth of the retail investor, the individual investor versus the institutional. And there's there've been some pretty dramatic examples of how that has impacted the market. And the one that comes to mind is the whole GameStop one that was a couple of years ago, I guess, where Wall Street had shorted the stock, and all these retail investors on Reddit decided that it was a great place to put your money, and I literally put some of the funds out of business because of the way it reacted.
I don't know if they were investors or just gamers that got mad. It's like that. It was a cause-driven trading strategy.
Yeah, right? Exactly. Well, and some of the others, like AMC Entertainment was another one that got beaten up so badly in the pandemic, and then all of a sudden it became this meme stock, and retail investors drove the stock price up like crazy. And created just a huge amount of volatility, not in just that stock, but in other stocks in that sector too. So, we definitely big impacts.
We may need a new name for the invisible hand, right? I mean, maybe there's another hand we need to take into account. So I think our guest is probably the ideal guy to help us with that conversation. Today's guest is Dave Lauer. And I've prepared a quick montage of some of Dave's other appearances. So here's a picture of Dave on our arch rivals podcast, The Problem with Jon Stewart. One more. Here's another picture of Dave laughing it up with Jon Stewart. Dave's appeared on CNN, CNBC, and he's testified multiple times in front of the Senate Banking Committee, starting back in, I think 2010, maybe even before that. Dave is currently the CEO of Urvin Finance, which is a social platform that connects individual investors to the companies they invest in. He's also the co-founder of the advocacy campaign, helping to empower individual investors to change market regulation, and they call that We Are the Investors, or We the Investors, which I think is a great name if I don't mess it up. So, Dave, thank you for joining us.
Thanks for having me on, guys. Appreciate it.
When was the first time you were in front of Congress?
It was in 2012.
Trying to fix them? 2012, okay. How did that work out?
It didn't. No. Then they had me back in 2014, and they were like, hey, all that stuff you said in 2012, like, what if that still applies? What's changed? And I was like, it all still applies. Nothing's changed. It's still the case.
You could have saved.
Tell them to look in the mirror, right? Yeah. Look in the mirror and see nothing's changed. Right?
So Michael and I were batting back and forth the idea that sort of shareholder engagement is a thing now. Like you can or should be interacting with your shareholders as if you were a commercial company, and you're interacting with your individual customers. So. What do you think about that idea of this? Is this new, and if so, why?
Yeah, it's new? Yeah, I think it's pretty new, and I think that up until recently, you can divide the world obviously into public companies and private companies, and private companies really would generally have a small handful of investors. not the case anymore, potentially. And then public companies, even though they would have a large investor base, they would just focus on institutional investors from a resource efficiency perspective and all of that. And in both of these worlds, things have really fundamentally changed. So in the private world, for example, as a company, we're funded under regulation CF, regulation crowdfunding. And that means that my small little startup has 2,000 investors. So this is already something that private companies have to deal with in a pretty unique way relative to, I think, what private companies in the past have had. And then on the public company side, like you're talking about these examples, Pete, of these companies like AMC and GameStop, who were fundamentally changed because of their retail shareholder base, because of individual investors, and new technology, especially social media, but all sorts of other things as well, has really shifted that landscape to where now it is more sort of efficient and effective to try and engage at scale with your shareholder base. So, I think that companies that do that are going to be set apart from those that don't, for all sorts of reasons that I think we're going to get into. But, I do think like this is a brave new world. Everyone's online, and then you've also got this trend of wealth that is transferring now to younger generations who are more comfortable online. They care about things in ways that previous generations have not, and they want to be connected and involved in ways that I think previous generations for whom wasn't even possible.
I mean, it is interesting that sort of throughout the history of investor relations and corporate investor relations, that they really have just mostly focused around industrial, Wall Street, larger firms. And I guess 20, 30 years ago, that probably made a lot of sense. But it seems to me that today that has to shift. And I'm just curious what you think. I mean, how do you think investor relations should be thinking about this now versus kind of the past?
Yeah, and think about it. In the past, and even today, if you want to get a list of your shareholders as a public company, or even if you're someone who's researching public companies, that information is public. The institutional investors, the institutional shareholders of a public company, that's public information. And so you can go look at a company and you can say, oh, this company, this hedge fund owns 10% of it, and this mutual fund complex owns 20%. Maybe there's private equity involved in owning large portions of a company, activist investors. But it's just sort of a handful of firms that gets you to whatever it is, 10, 20, 30% of the cap table of a company. And so that's a sort of tractable problem for an investor relations group. That's a group that you can reach out to. They're going to be engaged with you. They're going to be responsive. You can talk to them about what they want to see from your company, what's going to keep them invested and happy, that kind of thing. And those are conversations that can be had one-on-one. If you look at your retail shareholder base, it's going to be, thousands and thousands of people. And so one, that's hard to have conversations sort of at scale with a disparate, decentralized group like that. But two, up until pretty much now, if you're a public company, you don't get to know who your retail shareholders are. They are shielded behind their broker. And so all you see on your cap table is, Schwab owns this much and TD owns this much. And if you want to get to them, you have to go through a company that's a relative monopolist in the field, and you have to get this list of shareholders. And when you get that list, you get a list of mailing addresses. And that's it. You don't get phone numbers. You don't get email addresses. You get physical mailing addresses, right? And so imagine trying to do outreach via the mail to people that, especially again, as people are getting younger too, they're not even looking at their
Yeah, no, right?
Right.
Well,
It's
I
a,
mean, it seems like it's almost like there's two issues. One's the data itself, right?
yeah.
And you said that you're getting such antiquated way to reach out, but then also just the technology, the capability to easily reach out to thousands of investors versus a handful, right? I mean,
Yeah.
is that, yeah,
And those
that makes
mailing
sense.
campaigns, companies do that, and they're expensive, and they
Mhm.
don't work very well at all. And companies need their shareholders in all sorts of ways. You need your shareholders in general because you want a stable capital base. You don't want a lot of turnover, and you need them to vote. And you hopefully want them to vote the way you want them to vote, but you need them to show up. Sometimes you absolutely just need to get to a quorum as a public company, and
Right.
that alone can be very hard to do. And so the perception of retail shareholders is that they don't vote, and that's true statistically, but the reasons behind it are, I think, a little more nuanced. And it's
Mhm.
not necessarily that these shareholders don't want to vote. It's that often they don't know that there is a vote. If there is, they don't know how to vote. And if there are issues that you need them to understand at a deeper level than like just a proxy statement,
Mhm.
you haven't, as a company, likely been engaging them and involved with them and communicating to them enough so that they're not going to be as informed as they should be, and so often they're just not going to vote. And we see that when companies engage their shareholders in a fulsome way and in a substantive way, that those shareholders will vote, and they'll be informed, and you get it's just there are all sorts of advantages. If you think about it, just think about yourselves as individual investors and retail shareholders. Often you're investing in companies that you love, right? And that
Mhm.
you want to support. And so what a company has is this really untapped resource of its most passionate fans and its most passionate advocates, as well as some potentially very sticky investors if companies engage them in a substantive way.
Mhm.
And what sort of strategies have you seen to do that? Is there one strategy that like you would recommend people start with and then you branch out, or what are your thoughts there?
Yeah, I mean, it's something that is sort of this brave new world. So what we're building at Urvin is a platform, and you can think of it, looks very much like Reddit, but with data, the highest quality data on Wall Street. So you get all this tremendous data about public companies, and what's going on with their share prices over time, different ways of doing research and looking at them from a fundamental perspective, from a market dynamics and market structure perspective. And then it all connects into a community platform. And when you come onto the site, you can connect your brokerage account. And when you connect your brokerage account, we can see what stocks you're holding, and we can see the companies you are invested in. We can verify that you are a shareholder in certain companies. And we can also verify you are who you say you are, because the brokers have done the KYC process for us. And
Mhm.
so what that lets us do is it lets us create verified shareholder communities. And in our mind, at least, that's the best way that companies can engage with retail shareholders. Now, there are plenty of strategies for engaging with shareholders in general. These public companies, they have social media teams, and they're trying to respond when there are mentions of them on Twitter or on Reddit. But it's a tough environment to do that, because you never know on social media who you're responding to, really,
Right.
right? You don't know that that is an actual shareholder or an actual
Mhm.
customer. And there are plenty of campaigns run by your competitors or other just state actors who want to mess things
Sure.
up. And it's hard to use social media, these generic platforms, to do the kind of engagement we think public companies need to be doing. And I think one of the most important things, and it doesn't have to be through us, but it does have to be something that happens consistently.
Mhm.
Because most of the time, what a public company will do is they will only put resources into this when they need something from their shareholders. They need you to vote.
Right.
There's a proxy campaign, there's an activist investor coming in, and they need your votes to fight that off. And that's probably the worst thing that you can do as a public company, because you're not going to get people engaged just on your terms and when you want them to be.
Yeah, I mean, it seems to me that it's really similar to how we've evolved with customers and building customer experience and customer communities, and really starting to think of that community of customers as this ongoing long-term relationship, which then does give you the capability to communicate directly with them and get data about them and understand, where their needs are, where their pain is, that sort of thing. I mean, it seems like you're applying that in the shareholder retail investor way as well. I mean, is that accurate?
Yeah, I mean, again, that's why I thought when we were first talking about this idea, that it makes perfect sense to talk about it from a customer experience perspective. This is another customer, right? Companies are selling goods and services, but they are selling themselves to investors as well. And if you take a similar approach to engaging your shareholders as you do to your customers, that's going to give so many benefits to a company. I mean, from a strict sort of mathematical perspective, a more stable capital base and stickier investors will lead to a lower cost of capital, right? Like that's as straightforward as you can get. When there's less turnover in your name, in your stock, there's less volatility in your trading. You will have a more stable and sort of easier path to accessing capital markets when you need that. And you can also, when you think about trying to bring on employees, for example, and appealing to them by offering stock incentive packages, there is a benefit to having a stable stock price. There's this benefit, and that comes from a stable capital base and stable investor base. So I think there are all sorts of reasons for companies to want to engage their shareholders in a very similar way, with similar approaches that you would think to engage your customers, who you're trying to keep your customers. You're trying to make it sticky, that they think of you when they're making a purchasing decision, that it's easy for them to buy stuff from you, that they understand what you are as a business and they agree with you. All of these things apply equally to company shareholders.
Sure. I mean, and it seems like it also helps really solve that problem you brought up earlier about the data. How do you know who they are? How do you know how to reach out to them, and not by, snail mail, but actually a way to engage with them in a modern context as well. So,
well, it seems like the thing that jumped out at me a minute ago was this idea that, you have verified people on the other end of the line, as opposed to, bots from wherever. And that alone is worth the price of admission, I would imagine, right? I mean, I'm having actual conversations.
So, yeah, like companies have been very reticent to engage on social media, and with absolutely good reason.
Right.
Right?
That's what I'm saying. Yeah.
Well, there's certainly been some bounce back to some of those that have tried anyway.
For sure. And, look, some companies have done it really successfully. AMC is a great example of a company that only exists today because of its retail shareholder base. They were willing to fund the company when Wall Street was not. Again, GameStop, another good example of a company that not only is in a different position than it otherwise would be. And maybe it would have gone bankrupt, maybe not. They didn't really need to raise capital in the same way. But certainly the stock price has been held up by its shareholder base. And not only that, but those shareholders are their best customers and their most passionate advocates. And it's the reason any of us are talking about GameStop today. And that just has tremendous value to it. And if those companies, they did brave these online social media worlds. They went on to Reddit and Twitter, and to a certain extent, some with some less, with some more, engaged with their retail shareholders, and you can see the results of that. But I think a lot of companies see those companies as more of a cautionary tale than anything else, and I think that's a shame, because companies don't necessarily want to be in the news because of what their shareholders are doing. But I think that you run the risk in not engaging that you can lose control of any narrative, that you can lose control of any of these dynamics. And so I think it's important for companies to understand that there's a middle ground. That's what we're trying to provide, right? It's not going to be the wilds of Twitter or Reddit. So you can know who's on the other side, but at the same time, it's still something where you have to be brave to come in, right? You have to be willing to accept a certain level of chaos, and the companies that do, I think, are the ones that are going to be the most successful.
Here we have a question from the audience. Had several actually popping in, but so how does your approach help an individual retail investor navigate among the big investors like insurance companies and hedge funds?
Yeah, I think that's a really good question, and I do think it goes back to maybe 5 years ago. The big investors, the insurance companies and the hedge funds, they were the only ones anyone was listening to. They were the only ones anyone cared about. And that is not the case today. And so today you can be on Reddit, for example, and talking about this company, and you can be in a community, like there are communities of hundreds of thousands of people with GameStop specifically, for example, or AMC, and you don't know anyone, you don't know who anyone is in that community, and you don't know what their motives are and what they're trying to accomplish. And you can see just rampant sort of bot activity in these systems. The same thing holds true for Twitter. And that's not the case on Urvin, where we know who you are. And so the first companies that work with us are going to get that direct exposure to their actual shareholders, and they're going to be listened to, I think, to an extent that you wouldn't be otherwise if you were just some random account on a normal social media network. I think that the reason that the public companies that we're talking to, the reason they want to engage is because they want to know what their retail shareholders are thinking. They want to understand where those shareholders are at, what their priorities are. We're talking to several about holding AMAs, these Ask Me Anything sessions, where individual investors can directly ask whatever question they want. And that can be a bit disconcerting. That can be a bit nerve-wracking. We've done that already with the chair of the SEC, Gary Gensler, twice now, where we offered out to individual investors the ability to ask, the chair of the SEC anything. And I, sort of my hat's off to the chair's office that they were willing to kind of jump in to that, knowing they were going to get some uncomfortable questions and then do it again, and maybe even again. We're still in talks to do that. And so, I think that's the model that we see as being particularly effective, is actually bringing on individuals and giving them that direct access to the companies that they invest in. And there are other ways that this can be accomplished as well. Companies can come on, they can poll their verified shareholder communities to see what they're thinking. They can look at other analytics, the demographic information of their shareholders, which would help them again understand the best ways to engage them and what their values and priorities might be. So it is hard, I think, for you're holding 1,000 shares of a company. It's going to be hard for you to stand out next to an institutional investor with 30 million shares. Absolutely. But today, I think, is the best opportunity anyone has ever had to stand out, because it's all new. It's sort of this brave new world, and the companies that are jumping in, head first, are the ones that are really looking for that kind of engagement.
Yeah, I mean, it's interesting you used the word chaos before, and it seems to me like in some ways it's ordered chaos versus uncontrollable chaos, right? And which one are you going to choose? I'm thinking that at least some amount of controlled chaos is more effective than the other, right?
Yeah. We do a lot of shows on AI and the impacts of AI and so on. And it's, in my mind, sort of data quality. I mean, so this hasn't changed since garbage in, garbage out, but that is the threat, or one of the threats in the AI space. Like, who is this person talking? And the fact that you basically take that out of the equation, I think is really newsworthy. I mean, I how do you justify like a platform that can't do that? Like you're just if 90% of what the traffic is bot related or bot generated, well, like it's just unusable. It's kind of like what's the phrase, bloatware. When software gets so big it's just unusable, and it's kind of a similar scenario where the network now is just unusable because it's got so much data in it and you don't know where that data came from.
Yeah, I mean,
I thought you were going to say it's so much like Twitter, but okay.
I mean, I'm on Twitter a lot. I've got a big following on Twitter, and it is not only is it chaos, but it's the bad kind of chaos.
It is the
It's
bad
not
kind of
good
chaos.
kind.
You're right.
And you have no idea who you're interacting with at any one time. You have no idea. I mean, even frankly, at this point, you can kind of assume that most information you're getting from there is bad, not good. And it felt very much like the same thing when I was engaging with these investor communities on Reddit, in a couple of ways. The first was that, again, you never knew who was on the other side. And there were all sorts of reasons when you're talking about large amounts of money in these stocks. There were all sorts of reasons to run influence campaigns and try to influence and shape and change the narrative and conversation in these communities. There was big money at stake. And that definitely occurred. The other side of it is when people are sharing data on these platforms. Again, you have no idea the provenance of that data, the quality of that data. Even something as simple as here's a list of trades in a stock, we would find you would get tons of bad data just in that kind of thing, because a lot of these people on Reddit, for example, are getting data for free from their brokers, and their brokers are not incentivized to give them high quality data. Their brokers are incentivized to get them to trade a lot, and being able to do quality research on the fundamentals of a company does not induce trading activity, right? Weird behavioral things induce trading activity. And that's what the most successful brokers have really focused on, unfortunately. And so when we looked at what we thought was the gap in the market for our company, we saw it as these two things: the highest quality data, so that when you're looking at data on our platform that's from our platform, it's from a gold source of data. That it's the same kind of thing that an institutional investor, institutional portfolio manager would have on their trading desk. And then the second is this idea that everyone who is connected to their brokerage accounts has been verified to a certain extent. And so it's real people that you're talking to, and in these shareholder communities, it's actual shareholders. For us, we've seen that really elevate the conversation and really make it a constructive platform where people are there to help each other, there share ideas, but there's some level of accountability, which is just not what you find, I think, on most social media platforms.
No, true. I think we have another audience question. Here we go. How does it help getting more influence? I don't want to be talked at only. So in other words, obviously it'd be a great one-way channel to broadcast to the investors, but if you're talking about building a community, that's something different.
Yeah, I think it's a good point. And today, like I said, I think for most companies, all they do is kind of broadcast, and that's it. And so we are trying to change that dynamic, and we are trying to say that within these communities, again, these companies are coming in and they want to know what people think. They want to know where they're at, and they can't find out today. We've heard this so many times from some of the biggest brands, largest public companies. They say the same thing. We have no idea who our retail shareholders are, what they care about, what they want. And not only that, but we are beholden to our institutional investors because they're the ones that vote. And if retail investors actually showed up to vote, they can wield that power in a dramatic way. And that is something that I think most retail investors, most individual investors don't realize and haven't exploited, which is, and you see it especially in these, what you guys are calling meme stocks, but in these stocks that have high retail involvement and large retail bases, you don't see those bases coming together to influence the governance of the company and the direction of the company in a way that they could, right? So GameStop, for example, let's say right now, what we have seen in GameStop, and we can talk about it in a little bit, but it's called direct registration, and you've seen I think something like almost 80 million shares of GameStop has been directly registered outside of brokerage accounts by individual investors, where their name is now directly on the register, the share register of that company. And that kind of and it's a base of investors that believes a lot of the same things about the company and the direction of the company and what it should do. That kind of shareholding is immensely powerful, more so than almost any institutional investor. And so I think what we're going to see over the coming decade is you're going to see a lot more situations like that, where large numbers of retail shareholders come together on social media because they love the company. They want to protect it from Wall Street, from the abuses of trading and short selling and all of that. They want to come together and they want to support this company that they love and that they believe in, and who is probably undervalued because of all sorts of these trading dynamics and warped incentives in markets. And they're going to realize that they have power collectively, that they have a voice that can be used. And we talk a lot about ESG, right? ESG is just this buzzword. It's all anyone is talking about, and we almost never talk about the G. Everyone cares about the E and maybe a little of the S, but no one ever talks about the G, the governance of a company, and that is as important as any other factor in terms of investing or what can help to support the value of a company. Is good governance, and engaging large bases of shareholders in that governance activity, I think, is critically important. And I think a lot of companies are starting to come to that realization, and they're struggling trying to figure out how to do that, because up until really now, there hasn't been a way to do it in a reasonable way. I hope that answers the question. Right?
Yeah, I know. I think so. I mean, if we're thinking about it in the community context, then, and I mean, obviously there are a lot of things it overcomes, but what are some of the challenges that businesses that are trying to interact with their retail investors this way and build out this community? I mean, what are they dealing with, and how can they, overcome some of those problems, issues?
Yeah, I think part of it that they struggle with, it's resources. That's a major issue. Companies don't have unlimited resources. Certainly, investor relations departments don't have unlimited resources. So understanding how to direct those resources has been, I think, a problem. And for the most part, those limited resources have been directed towards institutional investors up until now. I think that, again, from just a brass tactics, like tools perspective, there have not been tools out in the market to engage with retail shareholders. And so most companies, their perception of how you engage with retail shareholders is that you answer tweets or you jump into Reddit AMAs or something like that, and that's all you can do. And again, you are navigating a minefield when you do that kind of thing, and you have no idea who you're navigating it against. Like, you don't know who's on the, like, as we've talked about, you don't know who's on the other side. So and then I think a lot of companies, they are nervous from a regulatory perspective, because there are regulatory requirements in terms of public company communication and Reg FD that say whenever you're disclosing something, it has to be disclosed to everyone in a fair way. It has to be done publicly, that kind of thing. And so those are the things that we primarily work with public companies to navigate. The idea of what resources do you need, what are the right tools to go about doing this, and let's make sure you stay on the right side of regulation.
Go ahead.
Sorry, go ahead, Pete.
I was just going to say, we've got another question from Stephen that I think blends in pretty well.
Oh, good. So does your platform help distinguish companies that govern to the share price from those who govern to the customer base? That is there enough two-way communication to sort that out?
So I think when you think about what we're doing, picture Reddit in your mind, right? And so that's probably the best analog in terms of from a functionality perspective. So yeah, there can be, I should say, as much two-way communication as the company wants and is comfortable with. But the voices, like if you go into a subreddit today and you try and understand like what are the dynamics in that subreddit, what are people talking about, what do they care about, you can do that generally speaking. And whether it's sort of manually browsing the posts, or whether, for example, for us, we can say to a company, hey, we can look at this analytically. We can use natural language processing and AI and all these buzzwords that people love. But we can do that, and we can tell you this is what people are talking about. This is what they care about. From a company perspective, there's a ton of value there. And I think on the other side of it, from an investor perspective, if you're looking to research companies and you're trying to understand more about their business models and that type of thing, that's where we have a very rich set of functionality and data sources to help you dive deep into the company's financials, the way that the analysts see the company, the way that social media is talking about the company, the trading dynamics of that company. And so I think from an investor perspective, yeah, that's a huge priority of ours, is to make sure we're providing the best data sources and a community in which people want to share research and information on the companies they love. And then potentially, one of the future visions that we have of our company is that it will become a platform for, maybe amateur and even professional financial analysts, that we've got the best data. You can take that data, form an investment thesis, share it on the community platform. People who are reading it know that that data is coming from the best possible places. And it's like I said, gold source data. And then ultimately you can establish a track record on our platform and then start charging for some of your premium research. So from a user perspective, there's our platform is sort of, there's the public company perspective, and then there's the retail shareholder perspective.
Sure. I mean, it does seem the ability to create that two-way, and that's very different than trying to do something like with Reddit, where you don't really know if the person is who the person seems to be, right? I mean, there's no. So at least with the ability to verify that individuals are who they say they are, there's a real powerful opportunity there for that two-way dialogue.
Yeah, up until today, or recently, I should say, the extent of retail shareholder engagement with public companies has been sometimes giving retail shareholders the ability to ask a question on an earnings call, for example. And that's mostly it. And I think very few IR departments go onto Twitter or Reddit thinking, here's a large community of shareholders that I can engage with. They go on and they're like, here is a giant minefield that I have to try and help my company avoid problems on. And so, I think that's a sort of a fundamental shift that we're trying to make with what we've done.
Almost like damage control versus the opportunity to build a relationship.
Exactly. Yeah.
Well, to me, the opportunity to use AI to take a look at these conversations and start to sort of segment your retail investors into different kinds of buckets. These guys care about this. These guys care about that. This is where the trending is going on. And then being proactive in how you engage with that market, then you can kind of lead the conversation to things that are less chaotic and more where you're looking for that feedback. Thomas mentioned earlier in the conversation about wanting to give his feedback, right? You can start to say, okay, these three things are really inflamed right now, either positive or negative, and you can lead that conversation rather than try and be reactive.
Yeah.
So
I think there's maybe something that will appeal to you guys also is it's not only about your existing shareholders who you want to you want to engage them, you want to know what they're thinking, and you want to maintain those relationships. But it's about potential shareholders and even developing a funnel approach to try and bring on more retail shareholders. So you can imagine, for example, on a data analytics platform like ours, there's a lot of people who might have your stock on their watch lists, for example, or people who are searching to learn more about your stock, or an online community that's not just verified shareholders, but anyone, and what are they saying about your stock? That is important information. And it's the kind of information that is actionable for a public company. It will let them take a more proactive approach to attracting new shareholders. And again, retail shareholders can be extremely valuable, like we've talked about before, in all sorts of different ways. And there's never really, that I've seen, been kind of this organized, systematic approach towards understanding who might be interested in being a shareholder, and trying to understand, what it is that would bring them over the line, and have them make that decision to execute that trade and jump into your company as a shareholder. And
that's a great point.
Yeah,
I mean, it really is like thinking of them like a customer, right? I mean, we now track buyer intent data, so we can, know if a prospect is interested and how interested. And so it's almost like that shift in mindset that says you can build that same kind of relationship with a shareholder or a potential shareholder in a way that you couldn't have done before.
Yeah, that's part of what we think is so exciting and fun about what we're doing, is we're transforming this. People talk a lot in Wall Street about democratization, and usually that means that they've figured out a new way to rip you off. But for us, we take it seriously, and we really believe it. And all of these things are things public companies were doing with and for their institutional investors before. They were trying to figure out how to attract new institutional investors. They were engaging ones that aren't investors to understand, what is it that they're looking for. The ones that are investors, they're making sure that they're doing what they need to do to keep them happy, to get them to vote the way they want. The same thing should be happening with public companies and retail investors. It just hasn't been we haven't had the tech and the kind of investor base that you need up until now.
Do you have an example of a company that you think has engaged effectively in building that retail investor base into an asset?
So I keep going back to GameStop, and I think it's probably the best example. And like I said, this idea that something like 80 million, or close to, I don't know the exact number, but let's say close to 80 million shares of GameStop have been directly registered. It's a really unique phenomenon, and you're starting to see it now in other companies as well. And we've spent a lot of time in our advocacy efforts to try and make it easier and spread more information about how shareholders can directly get that spot on the shareholder ledger, which means now that company knows who you are and knows how to contact you and communicate with you. You saw it with AMC as well. AMC did something where they offered an NFT to shareholders, to verified shareholders, and then that brought with it some perks at AMC movie theaters. I think you're going to start to see a lot more of that now that it's been done. And we talk to a lot of public companies that are excited by those kinds of ideas. They want to offer perks to their investors. They want to make it so that they feel appreciated. And again, when you can, on one hand, say retail investors don't vote, and then look on the other hand with GameStop, they vote. There have been votes where it's almost 100% of all shares have voted. In fact, it probably was more than 100%. And now you get into all sorts of problems with market structure and overvoting and truncating votes and that kind of thing.
We'll save that for our next episode.
Yeah.
That's all the time we have today, unfortunately. David, you survived the hot seat. Thank you very much for being here. Awesome. If you think you have what it takes to be in the hot seat, let us know. We'd love to hear from you. This is your In the Hot Seat episode for today. Thank you so much for being with us. I'm Pete Smith.
And I'm Michael Fauscette. Tune in next time for different faces, different topics, and different perspectives as we put someone different in the hot seat.